Welcome to another deep dive. Have you ever stopped to think about how all that essential stuff that builds our economy, fuel for your car, materials for everyday products, how it all silently gets moved around? Chances are a lot of it is traveled along our nation's waterways. And often it's thanks to a really remarkable industrial giant that operates, well, mostly out of the public eye. Today, that's who we're focusing on, Kirby Corporation. Our mission here for this deep dive is really to cut through any noise and give you a truly nuanced, objective look at Kirby. We've pulled information straight from their own corporate website, we've dug into detailed financial data, and we've even explored their pretty fascinating history. The goal is to equip you with a complete factual picture, what Kirby Corporation is, what they actually do, and where they stand in the market today. You're really about to get a deep appreciation for a critical, but often unseen, part of America's industrial backbone.
And that's exactly what we want to achieve for you here. Think of this as your shortcut, your guide to understanding a pretty complex industrial player, but without any speculation, no bias. We're focusing purely on verifiable facts, making sure you're empowered with a clear, data-driven view of this, often overlooked but fundamentally important part of our economy. You'll see how all these different pieces of information kind of fit together like a jigsaw puzzle, really, to paint a full picture of this company.
Okay, so kicking things off then, who is Kirby Corporation, really, at its core? At first glance, they might seem straightforward enough. They are, widely seen as the premier tank barge operator in the U.S. And when we say tank barge, you should picture these massive vessels designed specifically to transport bulk liquid products through our country's extensive waterway systems. It's not just some small niche operation. It's fundamental to industrial logistics in America.
Yeah, absolute fundamental.
What's particularly interesting about Kirby, though, is that their business isn't just one thing. They operate through two main segments, and they seem quite distinct at first glance. There's marine transportation, that's the barge operation everyone knows them for, and then there's distribution and services. They're based, strategically, you'd say, in Houston, Texas. Which makes sense, right? It's a hub for energy for maritime industries.
Just a perfect location, really.
And their roots, surprisingly, stretch back quite a long way. The corporate predecessor, Kirby Industries, Inc., was actually founded way back in 1921.
Wow, 1921.
Yeah. Then, fast forward a bit, Kirby Corporation itself officially started on January 31st, 1969. But initially as a subsidiary called Kirby Exploration Company, Inc., was later spun off, became independent in 76, and eventually changed its name to Kirby Corporation in 1990. So that whole evolution, from exploration to this diversified transportation and services giant, it tells a story, doesn't it? Adaptability, strategic focus within that industrial landscape.
And what's truly fascinating there is exactly that dual nature you mentioned, the marine transportation and the distribution and services segments. On the surface, yeah, they might seem separate, but they actually complement each other in a highly strategic way. It gives them remarkable diversification resilience across different industrial markets.
Interesting. How so?
Well, think of it like this. The transportation side. That's moving the raw materials, the finished products. It's like a crucial artery for industrial flow. Meanwhile, the distribution and services part, that acts as the critical support system, providing and maintaining the actual machinery, the engines, the equipment needed across so many heavy industries, including, importantly, the marine industry itself.
Okay, so there's a direct link there.
Exactly. It's an integrated approach. It allows Kirby to capture value at multiple points in that industrial supply chain. And to really get a sense of their scale, just consider this. Across both of these powerful segments, Kirby employs a significant workforce. We're talking 5,414 employees as of 2024.
That's substantial.
It really is. This isn't just, a few barges and some repair shops. It's a major interconnected industrial operation that, frankly, underpins a lot of what we take for granted every day.
That's a really powerful point about that integrated approach. So, okay, let's dive deeper into that first segment then, marine transportation. This is what really makes Kirby the waterways workhorse, right?
Absolutely. It's their foundation.
Their main job here is operating the largest inland and offshore tank barge fleets in the entire United States.
Yeah.
But what exactly are these tank barges moving around?
Good question. It's a whole array of bulk liquids, things absolutely critical to our economy.
Like what specifically?
Well, you've got petrochemicals, think the basic building blocks for plastics, resins, countless industrial chemicals, stuff that ends up in everything from your phone to your clothes.
Okay.
They also move black oil, which covers things like crude oil, residual fuel oils, feedstocks for refineries.
Right.
Then there are refined products, gasoline, diesel, jet fuel powering our transport networks, and it doesn't stop there. They also transport agricultural chemicals, vital for farming, for food security.
Wow.
And beyond liquids, they even handle some dry bulk stuff like sugar and coal. That's mainly through their specialized ocean-going barge and tug units. So yeah, it's a really diverse mix of essential commodities.
And what about their footprint? Where do these vessels actually operate? Because the U.S. waterway system is huge.
It is, and their reach is truly extensive. It covers the real arteries of American commerce. We're talking the massive Mississippi River system, all its tributaries. That network basically links the entire nation's industrial heartland farmers, manufacturers, you name it.
Okay, the Mississippi. What else?
They navigate the Gulf Intercoastal Waterway. That's like a critical coastal highway for trade.
Yeah.
And their operations span all three major U.S. coasts, Atlantic, Gulf, and Pacific.
All three coasts.
Yep. And their reach even goes out to coastal operations in places like Alaska and Hawaii. It really shows a comprehensive national presence.
Right.
Specific inland waterways mentioned in their network also include the Illinois River and the Ohio River, both vital conduits.
So they're really embedded in the country's logistics framework, making sure all these critical resources keep flowing.
Exactly. And if you connect that to the bigger picture, it becomes crystal clear just how strategically important the U.S. coastline and that whole inland waterway system are. And by extension, Kirby's role within it. It's not just, a bunch of rivers and coastal routes. It's one of the most vibrant, cost-effective, efficient transportation systems anywhere in the world. It acts as this critical high-capacity link, seamlessly connecting the nation's industrial heartland and its busy coastal states to each other, and crucially, connecting them to global markets too. Kirby's operations aren't just like facilitating trade, they're fundamental to enabling a huge chunk of America's industrial and agricultural output. Their vessels are like the arteries of industry, moving the lifeblood that powers our economy.
That's a great analogy. Can you give us some numbers on the fleet itself just to grasp the scale?
Sure. To give you some concrete figures from the sources, Kirby operates a really impressive fleet in this segment. They command, get this, 884 active inland tank barges.
884.
Yeah, and they're powered by 251 active towing vessels. To put that 884 number in perspective, that fleet represents a really substantial portion of the entire U.S. inland tank barge capacity. It really backs up their claim of being the premier operator and highlights a significant competitive advantage, a moat, if you will.
Right, because building that kind of fleet takes massive investment.
Huge investment, deep operational know-how, established relationships. It creates really high barriers for anyone else trying to get in.
Makes sense.
And that scale also gives them significant economies of scale. That often translates into better pricing power, more efficiency, in what can sometimes be a pretty fragmented market. These assets are organized into 5 distinct fleets, which suggests a highly structured, efficient operation. And on top of the inland fleet, they also own and operate 8 ocean-going barge and tug units. That extends their reach into that deep water coastal trade. So this marine transportation segment, it isn't just part of the supply chain. It forms a vital foundational link for all these crucial commodities that fuel different industries and ultimately impact our daily lives. Without that efficient bulk transport, many downstream industries would just, they'd grind to a halt. It really underscores Kirby's essential, even if often unseen, role.
That's a truly compelling picture of their foundational impact. But like we said earlier, Kirby is more than just barges. Let's pivot now and explore that second segment, distribution and services. This part really showcases Kirby's diversified industrial capabilities, right? It shows how they extend their influence beyond just the waterways.
Exactly. Here, Kirby positions itself as a leading nationwide service provider and distributor to a whole range of industrial markets. It's like the crucial support system we talked about.
So what do they actually offer in this segment? Is it just parts?
It's quite comprehensive, actually. They provide essential aftermarket service, genuine replacement parts for critical industrial gear. Think powerful engines, complex transmissions, reduction gears, lots of related components.
Okay, so maintenance and parts.
But beyond just servicing, they're also significant distributors and service providers for new diesel engines, transmissions, pumps. It's not just fixing things when they break. It's about proactively keeping vital industrial machinery running smoothly, minimizing downtime, ensuring peak efficiency across heavy industries.
And it gets even more interesting, right? They actually manufacture and remanufacture equipment too.
That's right. The company has significant manufacturing and remanufacturing capabilities. This includes producing and rebuilding specialized oil field service equipment, things like pressure pumping units, which are crucial for land-based oil field services, like in fracking.
Yep.
But their manufacturing muscle doesn't stop there. They also make power generation equipment essential for industries, communities. They make specialized electrical distribution and control equipment critical for managing complex industrial systems. They even make high-capacity energy storage and battery systems, which signals they're embracing, evolving energy needs, and even railcar movers, vital for logistics within big industrial sites.
Wow, so these are specialized, high-value components that directly support heavy industry.
Precisely. These components enhance efficiency across the board.
And the markets they serve are incredibly diverse, reflecting that broad industrial reach.
Absolutely. This segment caters to the demanding needs of oil field services, a wide range of marine applications tying back to their core business critical power generation utilities, on-highway commercial vehicles, and various other general industrial markets.
Plus, they offer equipment sales like generators and also rentals, things like compressors, lift trucks, refrigeration trailers.
Yep. That multifaceted approach means they aren't just selling and servicing. They're also providing adaptable, flexible solutions for temporary projects, emergency needs, or specialized operational requirements. It really enhances their value proposition to a broad industrial customer base.
So this broad portfolio in distribution and services, it raises an important question. How does this segment strategically boost Kirby's overall value?
Yeah, that's key. What we see here is Kirby providing a crucial single-source solution for their customers. Instead of a client having to juggle relationships with multiple vendors for parts, specialized services, different types of equipment, Kirby can consolidate all those needs under one roof.
So it simplifies things for the customer.
Massively. It significantly enhances operational efficiency, reliability for industrial clients. They deal with one integrated, trusted provider, and the strategic advantage of offering both marine transport and comprehensive industrial equipment services is, well, it's substantial. It creates powerful synergies.
So what kind of synergies?
Well, they can cross-sell services, deepen customer relationships, potentially leverage shared infrastructure or expertise across their operations. For example, the same deep technical expertise in diesel engines they use to maintain their own massive marine fleet. That's directly applicable to supporting power generation units or oil field equipment in totally different industrial settings.
Right, makes sense.
So it creates internal efficiencies, reduces costs, allows for broader market reach. It really highlights their evolution, not just a transporter, but a comprehensive, almost indispensable industrial partner. They are, quite literally, enabling the operational fluidity of countless businesses.
Okay, moving on to how Kirby Corporation fits into the bigger market picture. Let's look at its corporate structure, its market presence. Give us a clearer idea of its standing. First off, Kirby is publicly traded, listed right there on the New York Stock Exchange, ticker symbol KEX.
Right? KEX.
Which means if shares are out there for public investment, and crucially for us, its financials are regularly disclosed. That gives us the transparent data we're digging into today. What's particularly noteworthy about their market presence is their inclusion in some really significant market indices. Kirby is a component of the Dow Jones Transportation Average, the DJTA. That tracks major transport companies vital to the U.S. economy.
A big one.
And beyond that, it's also an S&P 400 component. That signals its solid position within the mid-cap segment of the U.S. stock market.
Yeah, mid-cap space.
These inclusions aren't just symbolic, are they? They say something about the company's size, stability, importance within its sector.
Definitely. It's a mark of significance.
Now, in terms of management, the company seems to have a pretty robust and experienced leadership team. Key people steering the ship include Joseph H. Pine. He's the chairman of the board, providing that strategic oversight. David W. Grusabinski is president and CEO, leading the overall operations and vision. Raj Kumar is EVP and CFO, managing the financial health. Christian G. O'Neill holds the presidency for both Kirby Inland Marine and Kirby Offshore Marine, so he's directly overseeing those core marine ops.
Key role there.
And Joseph H. Reniers is president of Kirby Distribution and Services, leading that diversified segment. Our sources also list, a comprehensive roster of other corporate officers, the full board of directors, It underscores the depth of their leadership and governance, which is critical for a company this size.
Absolutely. Strong governance is key.
Finally, just to illustrate the breadth of their operations, Kirby functions through a number of diverse subsidiaries organized by their main segments. On the marine transportation side, you see names like Kirby Offshore Marine, LLC, Kirby Inland Marine, LP, directly responsible for fleet ops, plus Penn Maritime.
Familiar names in the industry.
And for distribution and services, examples include United Holdings LLC, Stewart & Stevenson LLC, a major distributor, Marine Systems, Inc., United Engines LLC, Thermo King of Houston, among others, each contributing to their industrial service offerings. And there are other vital subsidiaries too, like Kirby Corporate Services, Kobe Terminals. It paints a picture of a comprehensive, layered corporate family built for efficiency across their diverse businesses.
And the significance of Kirby being in both the Dow Jones Transportation Average and the S&P 400, well, it really can't be overstated. It's a clear, powerful signal to the market about Kirby's substantial size, its liquidity, and its undeniable importance within the industrials and transportation sectors of the U.S. economy.
Right.
Being included in these respected indices means the company consistently meets pretty stringent criteria: market cap, trading volume, sector representation. And it's often a strong indicator that large institutional investors like pension funds, mutual funds, they're not just paying attention, they're actively investing. For instance, being in the DJTA puts them alongside other transport giants. It underscores their critical role in moving goods and resources across the nation. This inclusion reflects a level of established presence, stability, recognition as a key player. It gives us an immediate high-level understanding of where they stand in the market.
Okay, here's where the numbers really start to tell a story. Let's shift gears and look at Kirby's financial snapshot, its market performance. And remember, all this data is as of July 25, 2025. The last closing stock price for KEX was $118.48, recorded July 25th, 4:00 p.m. Eastern. On that specific day, the stock actually moved up $2.49, which is a respectable 2.15% gain. So, recent upward movement there.
Okay, positive close that day.
Now, for the bigger picture, Kirby Corporation has a substantial market capitalization of $6.65 billion.
Solid mid-cap territory.
Its enterprise value, which includes market cap plus net debt, stands at $7.88 billion. It gives a more complete view of its total value. Now, when we look at performance over different timeframes, we see some interesting trends. Over the last week, stock's up 2.28%. Past month, a healthy 5.49% increase. Looking at the quarter, it's up a substantial 20.65%. That indicates very strong short to medium term performance.
Quite a run in the last quarter.
Year to date, it shows an 11.98% gain. However, looking back over the full trailing year, it's actually down slightly, minus 5.58%.
Interesting dip over the year.
But then you zoom out further, and the long-term trends look quite positive. Over 3 years, KEX is up a remarkable 90.85%. Over 5 years, it surged 151.87%. And over 10 years, it gained 56.12%.
Strong long-term performance, though.
And just for context on its price movement over the past year, its 52-week high was $132.21. So the current price is about 10.38% below that peak. Conversely, its 52-week low was $83.94. So it's currently trading about 41.15% above that low point. Signals a significant recovery from its floor.
Yeah, those performance metrics give us a very objective, factual picture of the stock's recent trends and its longer-term growth path. The shorter-term gains, week, month, quarter, they suggest recent positive momentum, could be driven by recent earnings, maybe favorable market conditions. The longer-term performance, 3, 5, 10 years, showing that substantial appreciation, that indicates a history of significant value creation for shareholders. Often points to a company that successfully executed a strategy, navigated different economic cycles. That one-year dip, though, it reminds us that even strong long-term performers can have short-term pullbacks. Broader market volatility, sector headwinds, maybe temporary operational issues. Understanding that 52-week range helps put the current price in context. Is it near its recent high or low within a typical trading year? But it's crucial, as always, to view these numbers as factual reports of past performance. They reflect market reactions, company fundamentals. They're not, any guarantee of future prospects. That's inherently speculative.
Absolutely. A great overview of the market performance. Now, let's really dig into the key financial metrics. Decode what these numbers mean for Kirby, what they tell us about its financial health, its operational efficiency. We won't define every single term, as our listeners usually have a good handle on these, but let's focus on what they mean for Kirby in its industrial context. Let's maybe group some of these.
Sounds good.
First up, valuation ratios. These tell us how the market is pricing the company relative to its financial performance. Its PE ratio, price to earnings, is 23.50. But looking ahead, the forward PE is notably lower at 15.31.
That's interesting.
The PEG ratio, factoring in growth, is 2.30. Price to sales, PS, is 2.05. Price to book, PB, is 2.01. We also see price to cash flow, PCE, at 130.12, and price to free cash flow, PFCF, at 20.18. Finally, enterprise value to EBITDA. EBITDA is 10.72, and enterprise value to sales, EV sales, is 2.43. So what do these valuation numbers tell us? How's the market valuing Kirby?
Okay, these valuation ratios give us a really multifaceted view of how the market sees Kirby. For instance, that trailing PE of 23.50. Well, it might seem a bit on the higher side for a traditional industrial company. It suggests investors are willing to pay a premium for each dollar of Kirby's past earnings. But that dramatic drop in the forward PE down to 15.31, that's a very strong signal.
What does that signal usually mean?
It suggests analysts and the market overall anticipate significant earnings acceleration in the near future. This often points to specific catalysts, maybe recovering demand in key sectors they serve, successful integration of acquisitions, or maybe cost-cutting benefits finally hitting the bottom line. The market seems to be pricing that in already for Kirby. The PEG ratio of 2.30, while maybe slightly elevated, it reinforces that expectation of growth. And for a capital-intensive business like this, marine transport, industrial services, where assets are key, the PS of 2.05 and PB of 2.01 suggest a valuation that's, somewhat aligned with its asset base and revenue generation, not excessively high or low compared to peers.
And the EBITDA.
Right, the EBITDA of 10.72. That's a common metric for industrials because it accounts for debt. That number gives a good basis for comparison within the sector. It suggests that, considering its debt, the company's valued at roughly 10.7 times its core operating profitability.
That brings a lot of context to those valuation figures. Let's move to earnings per share, EPS profitability on a per share basis. The trailing 12 months, TTM EPS is 5.04. Projected EPS for next year is a strong 7.74, indicating expected growth of 18.2%.
Healthy growth projection.
For the upcoming quarter, EPS is projected at 1.66. Looking at yearly growth, EPS this year is estimated to grow by 19.90%. However, it's worth noting, EPS growth over the past 3 and 5 years was actually negative, at negative 15.69%.
Okay. A turnaround story then.
Seems like it, because on a year-over-year trailing 12 months basis, EPS is up 19.03%, and quarter-over-quarter, it's up 11.29%. What does this tell us about their earnings path, especially that swing from negative history to strong, recent, and projected growth?
Yeah, that mixed picture for Kirby's EPS is actually quite insightful. It really reflects the broader industrial and energy markets they serve, which can be cyclical. The negative growth over the past 3-5 years, that likely correlates with some challenging periods, downturns in oil and gas, broader industrial slowdowns, maybe exacerbated by global events like the pandemic, supply chain issues. Those were times demand might have dropped or costs soared.
Right, tough environment.
But the strong recent growth trailing 12 months, quarter over quarter, and those optimistic projections for next year, that points to a robust rebound, a positive turning point. This rebound is likely driven by things like recovering commodity prices, increased demand for industrial services as the economy picks up, and potentially successful strategies or cost controls Kirby put in place.
So they navigated the challenges.
It suggests that, yeah. While they face significant headwinds, Kirby seems to have navigated them effectively and is now capitalizing on more favorable market conditions, shows strong operational recovery and future potential.
That's a clear explanation. How about revenue and sales? The top line. Trailing 12-month sales stand at $3.24 billion.
Significant revenue base.
Sales year over year, trailing 12 months, are up 2.99%. But quarter over quarter, there's a slight dip, minus 2.77%. Sales growth over the past 3 years is 13.28%, and over 5 years, it's 2.85%. What does this tell us about their top-line growth and market demand?
The revenue figures also paint a picture of overall growth, yeah, but with some quarterly fluctuations. That's pretty common in industrial sectors. The $3.24 billion in trailing sales is substantial, underscores their market presence. The nearly 3% year-over-year sales growth indicates steady expansion annually, suggesting increasing demand over the longer term.
Yeah, the quarterly dip.
That slight QQ dip of negative 2.77% could be seasonal variations, specific project completions, minor market adjustments. Not unusual, really. You need to see it in the context of larger annual and multi-year growth trends. The 3-year sales growth of over 13% reinforces their ability to grow the top line, which is crucial in a mature industry. Combined with that EPS recovery we discussed, it suggests Kirby isn't just growing revenue, but also getting better at converting that revenue into profit.
Okay, good point. Now let's look at profitability margins. How efficiently are they turning revenue into profit? Gross margin is 25.75%, operating margin is 14.0%, and profit margin is 9.02%.
Decent margins.
And in terms of returns on capital, return on assets, ROA is 4.96%, return on equity, ROE is 8.95%, and return on invested capital, ROIC, is 6.41%. What do these margins and returns say about their operational efficiency and how well management is using capital?
These margins and return ratios are critical indicators, yeah.
Yeah.
Operational health, management, effectiveness. A gross margin of 25.75% means for every dollar of revenue, Kirby keeps about 26 cents after the direct cost of providing services. Pretty decent for an industrial company, indicates good cost control at the production level.
Yeah.
Operating margin of 14.1% narrows that down, shows what's left after all operating expenses, admin, sales costs, reflects core business profitability. And finally, the profit margin of 9.02% is the bottom line. How much profit per dollar of sales after everything, including taxes? Collectively, these suggest a well-managed operation turning a healthy chunk of revenue into profit.
And returns, ROA, ROE, ROIC.
Right. Those show how effectively management is using the company's assets, shareholder equity, and total invested capital to generate profits. For instance, an ROE of 8.95% means for every dollar of shareholder equity, Kirby generated almost 9 cents of profit. For a company in a capital-intensive industry like this needing huge investment in barges, equipment, these ROA and ROIC figures are important benchmarks. Do they generate sufficient returns on all that capital they deploy?
And do they?
Well, a positive ROIC of 6.41% suggests Kirby is creating value from its invested capital. That's a key metric for long-term sustainability and growth.
Okay. Finally, assessing balance sheet health. Crucial for stability, especially in a cyclical industry. The quick ratio is 0.96, current ratio is 1.58. These look at liquidity, can they meet short-term bills?
Liquidity ratios.
Their debt-to-equity debt-tech is 0.38, and long-term debt-to-equity LT debt-tech is 0.37. That indicates leverage. Cash per share is 0.91, book value per share is 59.01. What do these metrics tell us about Kirby's financial prudence, its stability?
These balance sheet health ratios are indeed critical for understanding Kirby's financial stability and risk profile. A quick ratio of 1.96 and a current ratio of 1.58 suggests Kirby has a healthy ability to meet its short-term obligations using its current assets. The current ratio, including inventory, shows enough assets to cover immediate liabilities. The quick ratio, more conservative because it excludes inventory, is still quite close to 1. That indicates good liquidity.
Seems solid.
But perhaps the most telling figure for a capital-intensive company like Kirby is its debt-to-equity ratio, at 0.38 for total debt tech and 0.37 for long-term debt tech. These numbers are remarkably low, especially for a company owning and operating such huge physical assets like barges and industrial gear.
Lower than you might expect.
Definitely. It indicates a very prudent, conservative financial management strategy. Suggests they aren't heavily reliant on debt to finance their operations and assets. In a cyclical industry like transportation and industrial services, this low leverage provides significant financial stability and flexibility. It means Kirby is better positioned to weather economic downturns, invest in fleet upgrades, or grab growth opportunities without being choked by high interest payments or restrictive debt covenants. Unlike many competitors who might be more highly leveraged.
That's a key differentiator then.
Absolutely. All these numbers together, they really provide a comprehensive, data-driven picture of Kirby's strong financial standing and its operational efficiency.
That's a truly thorough breakdown of the financials. Really gives deep insights into Kirby's monetary heartbeat. Now let's explore who actually owns Kirby stock and how the broader market sees its stability and risk. Looking at ownership structure, insider ownership shares held by executives and directors is pretty modest, 0.76%.
Low insider ownership.
Interestingly, insider transactions show a net decrease of Menico 1.11%, meaning insiders have collectively been selling slightly more shares than buying recently.
Okay.
But in stark contrast, institutional ownership is remarkably high at 99.98%. That means almost all outstanding shares are held by large institutions, mutual funds, pension funds, hedge funds.
Wow, virtually entirely institutionally owned.
Institutional transactions show a slight net decrease too, Menico 0.24%. Looking at the shares themselves, there are 56.37 million shares outstanding and 55.67 million shares float. That's the number available for public trading.
Okay.
For those interested in market sentiment, particularly bearish bets, let's look at short interest. The short float is 4.08%. That means about 4% of the publicly available shares are sold short. The actual number is 2.27 million shares short. The short ratio, which is how many days it might take short sellers to cover their positions based on average volume, is 4.35 days. Generally considered moderate, right? Not suggesting overwhelming negative feeling.
Yeah, 4% short float isn't screaming alarm bells. Moderate level.
Okay. As for volatility metrics, how much the stock price tends to jump around, weekly volatility is 1.71%, monthly is 2.06%. The average true range over 14 days is 2.37. Gives a sense of typical daily price movement. The beta of Kirby stock is 1.03. That's particularly interesting. It implies market-like volatility tends to move very much in line with the broader market, not excessively more or less volatile.
Beta very close to 1. Moves with the market.
The relative strength index, RSI 14, is 61.51. Typically indicates it's not in extreme overbought or oversold territory. Suggests somewhat balanced trading momentum right now.
Okay.
And what about analyst sentiment? The average recommendation rating is 1.29. On the usual scale where 1 is strong buy and 5 is strong sell, 1.29 is generally very positive.
Very positive consensus, yes.
Okay.
Close to a strong buy rating overall.
The consensus target price from these analysts is $130.83. Suggests potential upside from the current price we mentioned earlier. Our sources also detail recent analyst actions. For example, Wolf Research initiated coverage with an outperform rating, a $126 target back in April 2024. BTIG Research upgraded to buy with an $80 target in Jan 22. Stiefel upgraded to buy with a $65 target in October 21. So these are just specific reports of actions and figures from various research firms showing how their assessments have evolved.
Right. And the implications of that incredibly high institutional ownership, approaching 100%, that's quite significant. When nearly all of a company's shares are held by large professional money managers, it's generally seen as a strong vote of confidence from sophisticated investors.
Because they do their homework.
Exactly. They often conduct extensive due diligence. It suggests these pros see long-term value, stability, growth potential in the company. It can also contribute to lower volatility, as institutional investors tend to be less reactive to short-term news compared to, say, retail investors.
Okay, and the moderate short interest.
That 4.08% short float indicates that while, yes, some investors are betting against the stock, it's not an overwhelmingly high level. Doesn't suggest widespread negative sentiment or major red flag. It's a healthy level that allows for price discovery without signaling major distress.
Got it.
And beta is particularly useful here. Tells you how sensitive Kirby stock is to the broader market. A beta of 1.03 means if the market moves up 1%, Kirby stock is expected to move up about 1.03% and vice versa. Very similar risk-return profile to the broader market. Makes it relatively predictable within a diversified portfolio, at least in terms of market sensitivity.
Okay.
The analyst ratings, well, they provide a snapshot of external market perception. They're the consensus views of research firms based on their models and insights. We're just reporting these perspectives as presented in the data, keeping our objective stance, not endorsing or refuting their specific targets or recommendations. It's important to remember these are informed opinions. They can influence market behavior, but they aren't guarantees of future performance.
That definitely brings clarity to how the market views Kirby. Let's turn now to upcoming earnings and recent insider transactions. These can often give timely insights into performance and maybe internal sentiment. For upcoming earnings, Kirby is expected to announce its 2025 Q2 results on July 31st, before the market opens.
Okay, mark your calendars if you're following AKIX.
Investors and analysts will be tuning in closely, especially for the earnings conference call, scheduled for 8:30 a.m. Central Time. Management gives detailed commentary then, talks about outlook. It's a key day.
Definitely.
Recent earnings announcements have also provided some pretty positive signals. For instance, Q1 2025 earnings reportedly beat analysts' expectations, showed strong EPS growth even with market challenges, according to sources like Zacks and GuruFocus. Similarly, their Q4 2024 results highlighted robust financial health, strong cash flow, significant debt reduction. These headlines from places like AP Finance, GuruFocus, Seeking Alpha give us a factual overview of recent reporting and the market's positive reaction.
So recent performance has been strong, beating expectations.
Seems so. Now, regarding insider trading activity transactions by executives and board members, we have some specific public data here. It's crucial, as you said before, to present this objectively. Not drawing speculative conclusions about motivations, as these are public records, could be driven by many personal financial reasons.
Exactly. Need context.
We should clarify what the transaction types mean. Proposed sale is an intention to sell. Sale is the actual completed sale. And option exercise is when an executive acquires shares using stock options, often at a set price, sometimes before selling them.
Right. Standard terms.
Okay, let's look at some examples from our sources. A snapshot of recent activity. Scott P. Miller, an officer, had proposed sales and actual sales back in February 2025. Shares valued in the hundreds of thousands. William M. Waterman, a director, made a significant sale in November 2024, valued over $5 million.
Okay, sizable sale there.
Christian G. O'Neill, president COO of the Marine segments, had several option exercises and subsequent sales in November 24 and September 24. Values reached over $1.9 million for one set of sales. Similarly, David W. Judinsky, the CEO, had option exercises and sales in September 24 and June 24, individual sales totaling millions of dollars.
CEO activity noted.
Ronald A. Dragg, a VP and controller, also had sales in August 24. So these examples just highlight that various executives and directors have been active as publicly reported.
And it's vital to reiterate, insider trading data, while public and transparent, can be complex to interpret accurately. These are just factual records of transactions. When looking at this, it's generally more informative to look for broader patterns, collective buying or selling over a longer period, rather than reading too much into isolated individual trades.
Why is that?
Because personal financial circumstances, estate planning, portfolio diversification, needing cash often play a huge role in these decisions, completely separate from their view on the company's future. Our role here is just to report the data as it's presented in the sources. Ensure you have all the verifiable facts without guessing about specific motives or market impact beyond what the data clearly states.
Okay. To give a broader sense of the ongoing market chatter and sentiment around Kirby, let's briefly summarize some themes from recent news headlines. We often see headlines from places like Zacks highlighting Kirby as a strong growth stock or strong value stock. Indicates a consistently positive view from that source, probably based on their models.
Sachs often has quantitative ratings like that.
There are also recurring mentions directly tied to earnings announcements and the stock's reaction. Like a headline saying, Kirby stock price increases 4.3% since reporting Q1 earnings beat. Directly links market movement to financial results. Shows how earnings reports influence perception.
Cause and effect reporting.
Other headlines involve industry comparisons or investment recommendations. Is Kirby Corporation, KEX, the best marine shipping stock to invest in now? From Insider Monkey, puts Kirby in a competitive context. It's also important to note, not all headlines are purely positive. To keep it balanced, our sources include some from Stock Story that might say things like, 3 reasons KEX is risky and 1 stock to buy instead.
Need to show both sides of the commentary.
Exactly. Acknowledging the full spectrum of published views, the variability of market sentiment. These headlines collectively give a window into how the market journalist is currently talking about Kirby, offers diverse perspectives for you to consider.
Indeed. These headlines directly reflect external market perceptions, the collective views of analysts and journalists covering the stock. And it's important to remember, these perceptions can be swayed by so many factors, macro conditions like energy prices or industrial production rates, sector trends, and of course, the company's own performance. Our objective approach here is simply to present what the broader market, through these published views, is saying about Kirby. We're not validating or refuting these opinions, just showing you the diverse perspectives out there. Allows you to synthesize them with all the factual data and analysis we've discussed. It's about seeing the whole information landscape, understanding the different lenses through which a company like Kirby is viewed.
So, after all this information, what does this all mean for you, our listener? Why should you care about a company like Kirby Corporation operating quietly behind the scenes? Well, the truth is, Kirby's operations, while maybe not always visible, are absolutely integral to moving the essential goods, the raw materials that underpin so many industries and ultimately many products you use every single day.
It's pervasive.
Think about it. The petrochemicals they move end up in plastic in your phone, fertilizers for food, the refined products, fuel in your car, jet fuel, diesel for vital machinery. Their work is a fundamental, almost invisible backbone of modern life. Ensures the continuous flow of goods that keep our economy running. Companies like Kirby aren't just businesses out for profit. They are a critical, resilient piece of the nation's infrastructure and supply chain.
Yeah.
They make sure vital commodities get where they need to go, reliably, efficiently, even across huge distances, tough conditions. And this company's dual segments, the foundational industrial transport and the crucial equipment services, They really showcase the interconnectedness, the resilience of our industrial strength.
Yeah, that connection is key.
They're vital for everything from oil and gas extraction, fueling our energy needs, to power generation, keeping the lights on. They're like the robust plumbing system that keeps our nation's industries hydrated, keeps them moving. Understanding them gives a deeper appreciation for the silent choreography of our economy.
And this really does bring us to a deeper appreciation for the intricate mechanics of our economy, doesn't it? Understanding companies like Kirby operating in these often overlooked but utterly essential industrial sectors, it provides a much richer context for how products reach us, how industries function day to day. It highlights how information from all these diverse sources, history, corporate websites, live financial data, news headlines, can be meticulously pieced together to build a comprehensive, remarkably clear understanding of a single complex entity. It's about seeing the full picture, not just isolated snapshots, and recognizing the critical role these industrial giants play.
Exactly. We've journeyed through the breadth and depth of Kirby Corporation today, from its massive marine fleet, navigating America's vital waterways, to its extensive industrial service network, keeping heavy machinery running across diverse sectors. We've also dug into the fascinating insights from its detailed financial data, its significant market presence, painted a comprehensive portrait of this critical industrial player.
So, to leave you with a final thought to maybe mull over, how do these often invisible gears of industrial logistics, exemplified by companies like Kirby, truly shape the economic landscape and our daily lives in ways we rarely stop to consider? As you go about your day, perhaps you'll start to notice how the products and services we talked about actually connect to the world around you. This complex web of unseen connections that make everything else possible, and how companies like Kirby are truly essential silent partners in how modern society functions.
A truly thought-provoking question. Really underscores their importance. Thank you for joining us on this deep dive into Kirby Corporation. Keep that curiosity burning, and we'll see you next time as we continue to explore complex topics, one deep dive at a time.